Hello, it is Friday, the 14th of February, which is, of course, Valentine's Day, if you pay to play for that. And it looks like we're having a little bit of a dollar reversal, something we've been looking for some time. One of them, if we take a look at some of the commodity currencies, for example, this is the Kiwi dollar, New Zealand dollar, you can see that basically since the end of January we've been held underneath this daily 50 moving average, and it's usually a pretty good sign of a reversal. It's a backstop. So following a double bottom in January and the February low in this currency, it now looks like we've got a pretty decent bottoming pattern. And when you close above the daily 50 moving average, you usually see a bigger move back to the daily 200 moving average, which would mean a 50% retrace of this huge drop that we have made from September to January in this currency. And this bottoming pattern is going to start to play out. If we're going to fail, it's likely to be at the pivot level in the middle. You know, whenever you get a double bottom like this, the pivot level in the middle, the high, previous high, is what you need to break out of this range. And if we push through here, I think we will see much more upside in this currency. And you can see bigger picture that this is also at a really interesting third touch of a big trend line we've been making since 2020 in this currency. And so that gives us a really nice first target up here of 0.57, which would be the swing low from 2023, and the weekly 20 moving average. So 0.57 becomes our first target, and the second target would be up here in the middle of the range at this 200 moving average at 0.597 if we can push just to those new highs. And we're seeing the same pattern going on here in the Aussie dollar. Again, if we look at this on the weekly, really big bounce. We are actually pushing above the 236. I had this as a kind of 236 fib level, if you like, but we've got a little bit higher to go to tag that weekly 20 moving average, which is up here at 0.638. And if we look at where we are here on the daily, you can see we've done that same swing failure pattern double bottom, but we have broken above this swing high in the middle here from the middle of January. So new yearly highs for the Aussie dollar. And again, if we take this most recent swing lower, I think 50% of this and the daily 200 moving average should be a really good first target for this, following this swing failure double bottom in the Aussie dollar, which brings us up to 0.6515, and all of the commodity currencies in similar patterns. And this is, of course, all as a result of the trade wars that Donald Trump seems to be starting. He acknowledges that there's going to be some initial pain, but it will be worth it in the long run. If we take a look big picture at where we are in the Canadian dollar, because this is a massive triple top in the Canadian dollar going all the way back to 2016 in this currency pair, and we've had that third touch kind of false breakout here at this big 786 fib level. Now potentially we could see a bounce first time back to the weekly 20 moving average. You can see previously when we've trended, you know, this 20 moving average is really good and strong support. So potentially we could see a little bit of a bounce. If we take a look at this most recent swing from the lows, which will be back to 2021 in this one, we're very close to that big 236 fib retrace from this whole swing. And so I would say the combination of this weekly 20 moving average and this 236 fib level could be quite strong. Let's see what happens when we tag it. It's 1.413 in the Canadian dollar, but clearly for me, underneath that and underneath this weekly 20 moving average sets us up for a much bigger low move lower in the dollar Canadian. So Canadian strength to come, 1.37 and then 1.34, which would be back to these swing lows, back to the weekly 200 moving average and this previous swing low in the middle of the range at 1.34. So really big decision levels. I wouldn't be surprised the first time to tag this, if we look at it on the daily, I wouldn't be surprised the first time if we tag this 141, 1.413 level, we don't see a little bit of a bounce, but this is definitely pointing to lower with this price action in these currencies and everything that is going on. What does that mean for the euro? For the euro, we're back above. Again, that big 236 fib retrace, we're holding strongly. We closed above and held above the daily 50 moving average yesterday, and we're pushing higher. Haven't broken out of the sideways range in this one, and potentially, you know, we've got a little bit of a higher low. So this could just end up being a bit of an ABC correction in the euro. The euro is definitely lagging these commodity currencies. Same thing in the pound. This one is looking super strong though. But here we are today, just like the Canadian, testing the weekly 20 moving average, which has previously been pretty impressive support for the pound. If we look here to June last summer, and we looked at August, and we look back, in fact, you can see that this 20 moving average, if we go back to 2023, quite often is pretty important support and resistance. So closing this week and holding above this weekly 20 moving average says that this potentially, this whole correction from September is over and we're on our way higher. We've got some pretty nasty wobble level here in the middle at 1.276. So for me, I would say if we hold above this weekly 20 moving average in the pound at 1.26, we head to 1.276 next, and above 1.276. For me, this points to a much bigger new leg higher on this pound. So this dollar reversal, dollar weakness, is really good news for commodities, and that's showing, especially the shiny metal kinds, which have done really well out of this, but potentially could be really good news again for crypto. And we're seeing some pretty decent moves. I'm going to make a separate video for crypto. So what about stock indexes? Yesterday we had what looked like a pretty nice breakout from consolidation. I'm going to start with the NASDAQ because it's a really good, clear example of what I'm talking about here and what can sometimes be a bit of a problem. So when you think you've got a pattern tightening pattern up, a pattern of coiling up and tightening up like this, quite often you'll get a breakout, and it'll, if it's a false breakout or doesn't work, it's very often because it was an ABC correction or an equal measured move, and actually what you're looking at is a bigger consolidating pattern. And by this I mean here, if I draw this out, move it higher, this could potentially be 1, 2, 3 waves down, 3 waves up, and we could, if we're doing a bigger triangle, because normally triangles, remember, are 5 waves within it, so 1, 2, 3, 4, 5, and then you're on your way up again. And so if this is what we're doing here, from this low to this high, if this is equal, we could end up doing, you know, something like this before this is over, you know, and if you fail, very often it's an equal measured move. So if I draw from this low that we made on the 13th of January in the NASDAQ to this high, project it from here, you can see that this orange line that I drew was our kind of tricky level, because this is where these two swings are equal, and if we fail here, that potentially could be what we're looking at in the NASDAQ. So when you get a equal measured move like this, you put your fib retrace levels over both swings. So I'm going to go from the low here mid-January to this high and say that we're still going up unless we fall underneath this 236 fib level, which is 21,805. So we could see a pullback here. Remember, this is just a 4-hour chart. As long as we stay above here, we're still going higher. And this may be just consolidation, which is very common at those equal measured move levels. And that back underneath that 236 fib level, we could argue would be bearish. So back underneath, as long as we hold above 21,805 on any shakeouts, we're still going up, and this has a chance to retest the highs and then potentially be a new leg higher. And especially if we push through and start seeing some really strong moves higher here, that's likely what we're seeing. So that's, I always like to know where I'm wrong or where my risk is. And so here in the NASDAQ, this 21,800 level is it. And if we drop underneath here, I'm going to move this trend line and say, actually, here we are in a bigger consolidation pattern in the NASDAQ. And we could do the same thing here in the S&P. In the S&P, well, here's another way to do it. So you know, whenever I'm not sure if we're going higher or not. For example, from this high that we made on the 24th of January, this was a textbook, really beautiful looking 3-wave equal measured move correction, and up we went. So that means if I measure from this high to low, here's our equal measured move. When you do that, the most common retrace is a 786 fib. So if I draw from this high to the low, remember both swings, 786 is where we got to. And when you reverse at a 786, which means you reverse at this and you drop back underneath the 61.8 on a back test, the most common first target is the 38.2, which is what we did here. So we've done that 3 waves down, we've done this retrace, and we're on our way up again. And so the key question is, are we going to keep going higher and break out, or is this just kind of a swing higher before another leg lower? Because potentially, you know, when you draw a 3-wave correction like we've just done here, this could just be 3 waves down, 3 waves up, and then we do a bigger 3-wave correction before this is over. So quite often they can turn into bigger 1, 2, 3 patterns like this. And so we want to know where would be wrong, and where would be a trend reversal. So every fib from this high to low, all of these fib levels, there's 236, there's 38.2, there's 50% in the middle. All of these levels have been really, really well respected. So we reversed at this 786. Now we've gone up higher to this 886. Where does the 886 fib come from? It's, well, if you say that the 786 is a square root of 61.8, then 886 is a square root of 786. That's where this number comes from. It does work. And this is where we've kind of paused at. So we're going to apply the same fib rules to the S&P, continuing higher here. So fibs are like a staircase. You need to hold above the previous one that you just got above to keep going higher. And we have that 6,000 level that's been 6,100 level, which has been really strong in this S&P. And so we can say as long as we hold above this on a close, and we don't close more than, this is our ideal support zone on any pullback today. And as long as we don't close in terms of, if you were a candlestick trader, when you have a big up move like this, as long as you don't close more than 50% back of the open close, that's not a candlestick reversal either. That's kind of the Maribosu line in the middle here. And so we can say, if we do that here in the S&P, that's where our key support is, and we're still going up. If we apply the same fib pattern rule here, for example, if you reverse at a 786, your most likely target, your first target is the 38.2. Well, if we reverse at an 886 and we get underneath this 786, your first target, unfortunately, is this 50% here before we're likely to see a bounce, which would mean a bigger pullback to 6,049 in the S&P. So for now, as we head into the open, we've just got a pause at the moment, and it does look like a bullish breakout, but because we're so close to these key previous highs where we saw really nasty reversals, we need to be a little bit cautious, and that's what I'm looking for. Why do I think we might have a pullback today? I think it's mostly to do with the cycle. Mostly there's a lot of uncertainty. I thought there might have been a bigger reversal to those tariff announcements yesterday, but so far it's been pretty calm. However, in terms of the cycle, you know, there's a really good trade that works like 70% of the time, the pit bull trade, which says that you buy the dip on the Thursday or the Friday ahead of OPEX week, and you hold it into the beginning of next week, and it works really well. Well, at the moment, we haven't really got a dip, have we? And quite often you do get that dip ahead of it. If not, OPEX week doesn't always work as well as you want it to. So I wouldn't be surprised if we see a little bit of a pullback today. And when I look at these big US indexes, that's what I'm looking for. You know, quite often it's useful to look at other indexes and see what's going on with them. You know, the European indexes, the FTSE and the DAX have just been, this is the FTSE, have just been on fire this week. The breakouts certainly in these indexes have worked really well. If we take a look at the DAX, this one is on its own kind of little path here. They quite often work as an inverse to currency though. So for example, with that FTSE, if we start to see some really strong moves in the pound, we could see some FTSE weakness. So watch out for that. Certainly the DAX is on its own path. If we take a look at the weekly in this one, very, very strong uptrend this week. We could start to see some Friday flows in this one after this really big move higher and profit taking. Watch out for that. But clearly the trend is higher in that one. So what about metals? Let's take and some of these bigger stocks. Well, in gold, as you know, I'm still in the very much the buy the dip camp. I think this one goes higher, and we haven't quite hit the fib targets in this one, which were previously respected, but it kind of looks like we've got a little bit of a lower high going on, and not quite a double top. We didn't tag this high, but if we apply the same fib rules to this swing, so here's our first swing high to low, and here in this one we kind of went a little bit higher. I think that back to this swing low and back to this 4-hour moving average, or if we take a look at this on the daily, this becomes, in terms of daily candlesticks, a bearish reversal if we close more than 50% down on this candle, called dark cloud cover. In this case, we didn't do it here. You can see that, in fact, if you put orders at halfway back of this huge daily candle, you'd have been served very nicely. So at the moment, this is just a pullback and not a bearish reversal yet in gold, and 50% back of this open close points to us continuing higher, and so I'm not calling this a bearish reversal yet. 50% back is exactly where the low is today here, 2,915. So clearly this is still in a very strong uptrend, and as long as we don't close underneath 2,915, for me that's not a daily bearish reversal in gold, but it is pretty nasty shakeout back to key support that we're watching. If we look at it on the hourly, of course it's the hourly 50 moving average in a pretty big level. Remember, it's the daily close. We could have a little peek underneath this, but a daily close underneath it would point to this being a bigger three-wave swing lower, and then we can start talking about measuring the swings lower. So if we measure from this high to this low, and from here, we would be looking at 2,891 and potentially that bigger ABC to back test that 2,860 level. So key support hasn't broken yet in gold, even though the dollar has had a really interesting move today and big deal moves in these currencies. We could see some nice trends after a very, very long time sideways. At the start of the week in Palantir, we said Palantir had, even though it's like ridiculously overbought, Palantir had pushed through the fib support level 110 area, and as long as we held above that, we were still looking higher. And actually the next upside target in Palantir, believe it or not, is 170, which sounds insane when you can think about, when you consider where we're trading. And so far this support has become resistance. This target level, we are holding above it and consolidating sideways. The most bearish pattern we would see here, if you really are looking to trade a reversal in this one, a head and shoulders, which is the most common pattern you see if you overshoot a level. If we were to see a head and shoulders pattern here, even on the low time frame here, and then underneath 108, that for me would be a bigger bearish reversal. But for now, this is just bullish sideways consolidation, and this is still in a buy the dip move. And if we hold above 108, 170, I know I feel insane even saying it, but that's the next upside target. So let's have a quick look at NVIDIA as well before we go, because NVIDIA, you would think NVIDIA would be more affected by some of these chip moves. This is a really big deal resistance level here in the middle in NVIDIA. And you can see this daily 50 moving average. At the moment in the pre-market, we're sort of sideways right at this level. If we look left, it's a pretty big 135, 136 is a really previous support and resistance level, but it's also the daily 50 moving average, which is a big deal in this stock. If we look left, it was previously support when we back tested it, and support when we were back testing it in an uptrend, and underneath it was resistance, and here we are first time back. And so this is going to be a really big deal. We will see more upside if we push and hold above it. It's at 134.95 in NVIDIA. And if we do keep going higher, again, I'm going to go fib level to fib level to fib level. If we do hold above this daily 50, then 137 and 144, I think, is next. And before we retest the highs in this stock, if we look at the weekly, still looking really bullish, like a big kind of ABC and then continuing higher, isn't it? So that daily 50 then is going to be pretty key. See if we can hold above it, or if we reverse at it and we're still trapped sideways in this consolidation zone. I actually was surprised not that we didn't see a bigger reaction yesterday, but let's see how we go. Tesla still struggling. I will say for me, support and resistance and big back testing big fib levels means on the upside 373.50 is really key resistance for this Tesla. If we look big picture, I think that we have potentially got further to fall and a bigger retrace. So, you know, this 236 fib level is my touchstone, and this in this Tesla stock comes all the way all-time lows to all-time highs in Tesla. So 373, we got a really decent bounce off it, and support becomes resistance. So far, this price action looks really bullish, the way we have held this weekly 20 moving average. And it kind of sets us up for a back test of this level from the underneath, if you like, 373. So if we get an OPEX week rally in this one, I want to see what happens at 373, and I would say if we can get above and hold above 373, this correction is over and we're on our way and continuing higher. And for me, it's going to be key resistance in Tesla. That's what I'm watching. Okay, if there's anything you're looking at that you'd like me to take a look at, let me know.